to another episode of Smart Investing with Clem Chambers, CEO of Online Blockchain and previous CEO of ADVFN.
You might have to rename it Scruffy Investing.
Clem, how are you doing?
I'm doing fine. I'm doing fine. I'm watching the markets with a mixture of amazement and horror and surprise. And as you would expect in the current situation, it is well, it's a very unusual market. It reminds me when I was a little boy in the 70s, listening to my commodity trading father and seeing the markets then, when it's limit up one day, limit up the next day, limit down the day after, limit down the day after, limit up the day in the afternoon, limit up. It was all over the place for no good reason. The reason being that everybody is, in a panic or panicked or being forced or being made. If you're getting huge margin calls on your nickel position, and you're having to just dump your gold, and people who have got tight stops get blown out of their gold positions, and then people come in and buy it all up. You get this madness is badness situation, which is not hard to predict, it's highly random. And that leads to, go, why did the gold mine fall 6% yesterday? Why is it up 7% today? Why is it down 3% this afternoon? Why is it up 9% now? It's like, and the answer is very simple, not the one you want to hear, but that is totally random. And we're in a situation where the signal of the market is being overwhelmed by random fluctuations. And that's a very, exciting environment.
Clem, I was talking to one investor this morning and he was saying to me, oh, Bitcoin and crypto is going to go over 60,000 very soon, and then it's going to collapse straight down. My question is why we are not seeing already crypto going over the 60,000, because people has been raising donation for Ukrainians, and it should be used as kind of like safe haven asset in this kind of situation of political uncertainty. What's happening to crypto now?
You have to understand the scale. That Bitcoin's 700 billion. There's only 8 billion people in the world. Yeah, so that's $100 worth of Bitcoin for every human, and half those people have got no income at all. So the scale of Bitcoin is such that people raising money for Ukraine is not going to cause that much of a big deal. Now you could say, well, why aren't everybody piling into Bitcoin because of all the trouble? Well, you might look at the chart and see they have been piling into Bitcoin ever since Afghanistan. Well, you've got to also ask yourself, why did America pull out of Afghanistan in a hurry? Why did the UK pull out of Afghanistan in a hurry for no apparent reason, all of a sudden? Well, clearly they knew what we now know, that this Ukrainian thing was going to kick off. Remember, it was America saying, they're going to invade, they're going to invade. And I was going to go, no, of course they're not. They wouldn't be that stupid. And America could say, they're going to invade, they are going to invade. Oh, fake news. No, they never do that. Never be that stupid. And bang, they did. Well, it might just be, you see, the market is always right, apart from when it isn't, of course, but it has a very, very bad habit of being always right, or nearly always right. So when it moved back then, that was, because remember, Bitcoin was going into the toilet at the time, and suddenly went and turned and went straight up. Everyone went, wow, look at that. Oh yeah, Bitcoin is great. Bitcoin is groovy. And I was saying, well, it's all those people in Afghanistan, leaving Afghanistan with a smart stick in their ear. Not leaving $5 million on the airport tarmac like one of the ministers did. And there's a big element of that. And there was a big element of that problem occurring and causing that difficulty in China, etc. But if you, with Captain Hindsight hat on, you could you look and go, well, the reasons the Americans pulled out was they needed to have all their armies. They want to fight on two fronts. Yeah, forget Afghanistan. We might have big trouble in Europe. Shut that down. Ship our resources to Europe, and up goes Bitcoin. Everyone goes, well, look at that. Yeah, Bitcoin, great. Well, actually, it's the people in the know on both sides of conflict loading up on Bitcoin. Well, when it happens, They've got to unload, haven't they? If you've got to pay for your super yacht parked outside of Malé in the Maldives, what are you buying your fuel with? What are you paying your mortgages on your $100 million apartments? What are you paying that with? You see, this world is full of AML and KYC, which is an absolute pain in all one's orifices. But that's exactly what all that messing us about is for, to stop people like that carrying on regardless after they cause the devastation they're causing in Ukraine. Because now the banking system and the money system is so bolted down, it's extremely hard to move your money. How are you going to off-ramp your Bitcoin? Well, you are going to have difficulty with that, but it's still going to be a downward pressure if you're having to turn that into fiat, because you loaded up on it because trouble was coming. You know, they say buy insurance when you can, not when you need to. And, you know, anybody who's got hundreds of millions or even billions in cash knocking about, hearing that there's going to be a problem from their mates in Ukraine, is going to buy a lot of Bitcoin, aren't they? Getting it back into fiat, now there's a trick. And maybe that's why it moves in the middle of the night, because that's Asia, isn't it? And it's a little bit easier to move money around in Asia than it is in Europe, for sure.
What about Chinese the CBDCs? Because you thought about, okay, that's the reason why America pulled out of Afghanistan, could be that they knew what's going to happen. But China...
Well, they spend enough billions, don't they, on working it out. They've got blooming satellites flying around the world 24/7. I can see them flying over my house. Yeah, they've got all the hardware. And if they haven't got James Bond walking around Moscow, I don't know what they're playing at. So they should work out when 160,000 troops are being moved, and they should know pretty much why. So you would think that if anyone's going to know, having spent untold billions trying to get the capacity to know, that they would know. And it would appear to be very sensible to stop fighting a silly war in Afghanistan when you might have World War III in Europe. Might be a good idea not to be wasting your elite soldiers and all your people that can sneak in and out, all that messing about, when they're needed perhaps in Europe at the turn of a hat. Remember, the governments of Europe were calling it, America was calling it weeks in advance. They're going to invade, they're going to invade. And Russia was saying, no, we're not, no, we're not. Why would we do that? No, we're not. And boy, they did. So America knew weeks before. But you don't tell me that only worked out when 10,000 tanks showed up at the border. They would have known that. They would have seen the dust coming for weeks.
But
China, months even.
China would know that already, because they've been buying. They've been buying much time over last year. They've been buying and buying.
Well, I think China is always buying, but I mean, raw materials, yeah.
Yeah.
And we're in an inflationary environment where one of the ways to protect your money is to buy half commodities. And you've seen that they've absolutely flown since this has occurred. And, I think that it's fair to say that people in the know have known this was coming. And, if you look at the charts, you'll see moves way before, any of us knew. But obviously Bitcoin, if there's a potential for you as a very rich Russian person having all their assets frozen, and with liabilities all over the world, And remember, you probably stashed everywhere you can. But the last thing in the world you want to do is move any stash in a hurry, because the moment you move it, the chances are it's going to be revealed. So you're not going to be moving your money around. You're going to be pulling from one of your stashes, and then pulling from another one of your stashes. Well, obviously a good stash is going to be Bitcoin, and with an account on a exchange in Asia, where they maybe don't care so much, where they send the money. And maybe the money goes to your Far East Asian bank account, and they wire the money to the Maldives for the guys that are going to put oil in your super yacht. So those sort of things. But you see, rather than Bitcoin being bought now, it's being sold. So you're going, they're going to have to buy Bitcoin. There's a war. They bought Bitcoin when they knew it was coming. Now they've got to sell it. Now it's here. And I think to an extent, there's a little bit of that going on with gold. But in the long term, obviously...
Okay. Clem, go on with gold, because I'm interested in that. When they've been buying gold then?
Well, I'm keep buying gold. And I simply do not understand clearly what's going on there. Now, you could say people are, who are under issues with sanctions, etc., might be sellers of gold. You could also say that if you look at the gold price over the last few years, it's been going up in direct relationship with Russia buying gold. But I wonder why they've been buying gold. Oh, I wonder what they were thinking. See, there's only one use for gold apart from flashy teeth and a bit of electronics, and that gold is for war. That's what gold's for. Gold is for war. Hey, why does Britain have a whole building full of gold? It doesn't do dentistry. It doesn't do electronics. Why is it not a building full of gold? Gold is for war. What's, oh, all of a sudden you're at war with, Outer Mongolia. You have to start paying with gold. No one wants your paper. So if you've got even a scintilla of worry about war, which after all, if you've got 100,000 soldiers like Britain has, maybe that's an old number, but if you've got an army, which is a big investment, you've got an air force, it's a big investment, you've got navy, which is a big investment. Well, you are investing in defense. Well, investing in gold is investing in defense, because gold is what people ask you to pay if you ever need to use those warships, airplanes, soldiers. That's why countries have gold reserves. It's not because gold is money, it's because gold's the only money when there's a war. Outside of a war, gold's terrible money. During a war, it's the only money. So gold is for war. That's why Russia was buying it. Well, it can't buy it now, can it? In fact, it's producing it, and its producers are not allowed to sell it. They're getting their own supply, like high on their own supply. However, they're also going to have to, at some point, sell it. Or maybe someone's selling it to somebody who's selling it to somebody who's selling it. There's someone who's selling it. I mean, let me tell you a funny story. One of my sins is caviar. I love caviar. I don't eat it often, but when I do, I eat a lot, because there's nothing worse than not enough caviar.
What does it taste of?
Well, it's fish eggs, isn't it?
Okay, so it tastes like fish.
Yeah. Okay. I mean, if you buy fake and black caviar, it doesn't really taste like caviar, but it tastes pretty good. And then if you buy salmon roe, which is about 0.5% the price of caviar, it tastes pretty good. And if you get cod roe, which you can deep fry in your local chippy, it tastes pretty good. Fish eggs taste pretty good. But caviar can be either terrible or very good. It's terrible when it's farmed, because all things like that taste like what the animal eats.
Yeah.
To an extent. And if it's eating mud because it's getting fed mud by the fish farmer, the eggs aren't so great. But if it's swimming in the ocean, in this case in big lakes, or whatever, Caspian Sea or whatever, or down Siberian waterways, or in Canadian waterways, if it's a free fish, it tastes amazing. But it's nothing worse than paying through the nose for caviar that's farmed. It tastes like mud because you've been ripped off. So I'm in this restaurant, and they go, "Oh, today, sir, we have some caviar, fantastic caviar." I go, "Yeah, I've heard that one before. It's going to be, French caviar, the famous wild French sturgeon that doesn't exist." So I go, so yeah, where's this caviar from then? Because CITES, which is the endangered species law at the time, made it illegal to get wild caviar. So all you're ever going to get is mud tasting caviar, which costs you way too much money for something that doesn't taste very good. But people have it because it's romantic. And they go, no, it's really good. It's from China.
Oh.
And that's why I said, oh, China. And I thought about that, and I thought, Chinese caviar. Okay, let's give that a go then. It was amazing.
Where do they get them from?
Well, they might ship empty tins into Iran and ship out full tins, mightn't they? That would be the sort of thing the Chinese might do. So I would imagine it was some clever deal whereby some Iranians bought some cheap empty tins, and the Chinese took them back at a special price. So, the Iranian or the Russian caviar ended up in China, and it was Chinese caviar.
Mm-hmm.
So maybe, there'd be quite a lot of Chinese Bitcoin or Chinese gold, etc., 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 etc. So there will be leakage of these things. However, caviar and Chinese gold and the way that assets, see, money's like honey, it just flows and it gets everywhere. And it's pretty sticky sometimes, but it gets everywhere. And so, you know, if people need to sell their gold, need to sell their Bitcoin, doesn't matter if they're up to here in sanctions, it will find a way.
They can do it, yeah. Okay.
However, so there might be some downward pressure in the short term there, but in the long term pressure, there's three things that are very important that are happening now: inflation, inflation, and inflation. There was already 50 to 100% inflation baked in to the system, and everyone's going, "Oh, it wasn't us. We didn't do it. We didn't print the money. No, it wasn't us. No, it's them over there." But now, of course, with all these sanctions and all the fact that you can't buy gas or oil, or maybe they won't even sell it to you, and the fact that 40% of the supply of wheat that goes to Egypt is now in Ukraine and Russia, and that apparently isn't necessarily going to be going anywhere. Inflation, inflation, inflation. Nickel, car batteries, that's all coming out of Siberia. Forget about that. So commodities for now, and maybe for a long time. A few days ago, Euro came out and said, we're going to issue $1.5 trillion of euros to fund our military and fund, support for this, that, and the other. 1.5 trillion. 1.5 trillion. That's inflation. That's straight inflation. Wars create inflation. The big driver of inflation is war. So you've got inflation as COVID, which was kind of like
getting worse. Yeah. Getting worse with the war.
Yeah. And now we've got more coming with this war. So unless the angels sing and there's some miracle occurs, then it's going to be inflation upon inflation. So there's only one way gold can go. But right now, we're in panic, noise, random mode, and everything's doing that. But the trend will be that. And the noise will go all over the place.
Clem, what do you think is going to be kind of like the timeline? I know it's difficult to predict when gold is going to move up a lot, but this trend, like sideways, how long do you think is going to go for?
It's not sideways. That trend is not sideways. If you've got if you're on ADVFN, pull up the chart. It's XAU USD.
So X.
Yeah, AU.
Sorry.
You had it there.
Yeah.
AU, XAU. No. X, A for Apple. Yeah. There you go. It's at the top there. Oh, yeah.
Here it is. Oh, I have to add it. So,
well, yes, that's because you're on the monitor.
Financials, okay.
No, don't go to quote. Quote or chart.
Okay.
So XAU.
AU.
US. Yeah, there you go. Right. Okay, even better.
5 years.
Well, why not? Leave it there 5 years. As you can see, you said staring through his webcam camera. That's not a noisy chart. That's straight up. Now, you could say, well, it was 2050 yesterday morning, and it fell to 2070. But that is the volatility you're getting from this huge amount of financial noise that's exploding in the market. But over time, that won't look like that if you look at 5 years. That will just look like reversal.
Can we see an example if we go back?
Oh yeah, you just had it on the screen. You just taken it away. Move it back. There you go. From 2018 to 2020, look at that run. That's 800. That's 60% rise. Yeah, but look at those big holes and all that every now and again volatility. So what you see the market does, it goes straight up, it pauses and jumps around, and then it goes straight up, and then it jumps around, and it goes straight up. Now, the way to understand is you have what's called a repricing event. So if you take one of those sideways or slightly downward channels on that rise, it's basically establishing a price. You're moving the chart around a lot, Steffi.
Sorry.
You're destroying my narrative.
Okay, here it is.
Right. So if you take, say, in the middle of 19 to 20, there's a two-step vertical there. So something happened that makes a repricing. Okay, somebody gets indigestion somewhere. Who cares? An event occurs. It reprices, so it just goes straight up, and then it stops because it's repriced. Now, there's nothing to make it go down there. There's nothing to make it go up. So it just jiggles around. It blows in the wind. It flaps in the wind, and that's all it does. Yeah, and then something else happens, and it reprices again. Yeah, and then it flaps about, and because nothing's happening, people are losing interest. It's slightly bearish. It tends to drift off. It drifts off because it's just got a bit boring all of a sudden. Something else happens, bang, up it goes. So there you have a classical bull market. So it goes up. That's the shape. It goes up and it drifts off. It goes up and it drifts off. So you can see that something as powerful as a 66% rally is punctuated with long periods of going nowhere. And it's the repricing events that make the jump. Now, that repricing event could be, for example, I don't know, someone at a big investment fund goes, well, we need to shift our allocation of gold from 2% to 5%. Yeah, which means they have to go from 20 billion to 60 billion or something like that. Yeah, and that's what spikes the price. Or somebody on 30 Minutes in the US does an article about how gold is the next Bitcoin. And everybody jumps in because they saw the news article, whatever. The overall trend is up, and it's punctuated by things that cause a repricing that cause it to step up to the next level over that period. So if you go to the end of this chart now, Stephanie, you'll see that you've had a very long,
No, okay.
So you see, it's had that bull market. It's gone into a bit of a bear. That bearishness has ended, and then it started to drift up. And again, if you look at it, it started to drift up around about the time the Afghanistan happened.
Yeah.
Drift. And now suddenly it's kicked off. Yeah. But underlying all that is inflation. Yeah. Inflation is the upward pressure, and then events kick it up the next step. So that inflationary pressure is not going to go away. And, there's very few things that you can think of that undo the damage that's already done with inflation. Because there's this thing called inflation expectations. And our friends, the Federal Reserve, look at them and they go, oh, well, inflation expectations aren't high, and therefore we don't have to put up interest rates, and other excuses. Whereas in the past, that's been a good model. Over the last few years, the actual way they measure inflation expectations is actually the bond yield curve, which they actually control themselves. So that's no longer a good signal. It gives a false picture of that. Sorry about that. It gives a false picture of inflation expectations. And what that means is that nobody really knows what they are. But in the last few weeks, those expectations have gone up because the world has woken up to inflation and to that it exists. And everybody's going into the supermarket now and going, wow, look at the can of beans. It's gone up a lot.
I know.
So inflation expectations are now high, and that will feed into a feedback loop that's going to push inflation even higher. And then you have this Russian-Ukraine disaster, which can only make things worse. So the underlying pressure on gold will be there for years now. So I just feel that you just have to buy the dips. People and markets take a long time to catch up sometimes with these.
So Clem, buying the dip, what do you buy? We know you can buy physical gold if you want it, you can store it, or you can buy ETF, or you can buy stocks. Which stock are you looking at? And
you've got to study all. Well, let's run through the things you can buy. You can buy gold. You can buy gold coins or bars. Yeah, you can buy silver. Silver is a slightly more faster, more excitable version of gold. So you can buy physicals. You can buy physicals that other people look after for you. Places like Bullion Vault and Kitco, where you give them the money and you trust in them to actually buy the gold and look after it for you, and you can call it down or you can sell it with them, etc., etc. That's quite a good way of doing it if you feel you have a counterparty that you can trust. And then you've got equities. So you look at gold mines, you study gold mines, you go, oh, I don't like that gold mine in Russia, that might not work out well. Oh, here's one in America. Oh, well, that's going to be safe. Oh, there's one in South Africa. Ooh, not quite so safe. Oh, there's one in Egypt. They might have trouble with price of wheat going forward. So you study all these things, and then you pick the ones that you like, and then you diversify them geographically. And then you've got ETFs. So you can buy an ETF, and it will, generally speaking, track the price of gold, on a weekly or monthly basis extremely accurately. Over years, not so much. And then you've got the crazy end, which would be options. So, you can buy yourself gold physical options, gold share options, and all that stuff, and find out that the people selling you their options are smarter than you, and that you don't make any money and they do.
So Clem, can you explain a little bit more about the option? I think our viewers, they understand gold, the equities, and we mentioned already a few stocks, but the option, I don't think
options. Okay, the thing to understand about markets is that there's three sorts of markets. There's three sorts of games: negative sum, zero sum, and positive sum. The only one with positive sum is equities, because money is coming to the table, money is being added, value is being added. So that's the game to play. If you want to gamble, you gamble with things that have apparently a big upside. Wow, I can put 10 down and make 100. Yeah. But normally the reason those offers are on offer is that you've got no way of winning. And a classic one for that, for most of us anyway, is options. Because options are sold to you by anybody that wants to sell them to you. But those people that are selling them are geniuses with mathematical PhDs and computers, as big as the Eiffel Tower, who come to you and say, "Hello, little boy, would you like to buy my options? They're well priced. It could go your way." But the answer is, you're going to lose. If you can't see the fool at the table, it's you. The only way it would seem that you can make money in options is by being an absolute blooming genius, or by selling them. And it's unlikely you're going to go in and start selling calls and puts, because people don't, and it's a professional game. So options, period, are just a gambler's roulette table, and I predict that you will play and lose horribly. So why not just buy some gold shares in some great gold mines? That's what I'm doing, and leave the options to unless you want an expensive education. Then why you should do options? You should. I know everybody's now going, "Oh, great, options! Yeah, it's exciting. It sounds exciting. Oh, I must do options now. Oh, yes. I know I can win. I know I can beat the professionals with PhDs. I am going there," which a lot of people have done. All those Wall Street bets people. And that's why there's not so many of them around anymore, because they played the option game. And funnily enough, they started with a small fortune and ended with a small one. With none at all. Sorry. Let me say that again. Started with a small fortune and ended up without one. So yes, options. I would say no. Just say no. But there's lots of good gold shares out there, and there's also silver out there to look at, and platinum. So platinum stocks, gold stocks, silver stocks. They're all there, and they are actually right now incredibly cheap. And I to be honest with you, I don't understand why, but I think it's just a case of the market is so addled with QE, so addled with multi-billion-dollar tech companies, that it will take some time for it to adjust to a new reality.
Clem, silver stocks, do you have one for us today?
Well, yes and no. I can name one for you, but I wouldn't recommend it. I mean, I would not recommend it. I own it, but I'm not in the business of recommending particular shares on this particular task, because it is wild and wacky out there for sure. One has to make sure you have a strategy. I hate to use that word, but right now, unless you want to trade intraday, which is why not, the volatility is there. Tough game to play unless you know what you're doing. Then you need a long-term plan. You need to say, this is what's going to happen, and then you need to stake it out with a portfolio. So you go, well, it's all going to be over in Ukraine in a week. They're going to, Putin's not going to be there, and therefore it's all going to go back to normality, and therefore I'm going to do this, this, and this. or, oh, well, you know, it's going to be a quagmire for the next 3 years, sanctions can do that, that, and the other. Oh, you know, Ukraine's going to win, da, 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 da. Whatever, come up with your strategy, with what you think is going to happen, or your what ifs. If this happens, then that. If that happens, then that. And then state that out as cleverly as you can to capture your idea on what happens next. Because you can be guaranteed most people won't be doing that, and therefore you've got a chance of doing really well.
So Clem, like saying everything we said about the geopolitical situation, about the market, it looks like it's good to be in mining equities or investing in commodities. So we talk many times about having a diversified portfolio. Do you think it's sensible right now to overweight your portfolio towards gold and commodity, or you still need some, you know, healthcare, some technology? What will you go about that?
Well, I'll tell you what I'm doing. I think equities are going to crash.
Ooh, okay.
But obviously, if we get a load of QE, they won't. Yeah. So I want to be quite a lot in cash because I don't want to catch a big downdraft. I prefer to miss a stable position than catch a big drop. I can't see for the life of me why all these gold stocks are so cheap. So I've got a big bunch of money in precious metal things. And I generally, historically, I don't like precious metals because in boring times, they ain't going nowhere. Having said that, they have gone from 250 to 2000 in the last 20 years. If you're prepared to wait that long, that's a pretty good return. However, there's more to be had in good times in equities. So it's just a question of what happens now with this conflict, what happens to the inflation picture, and how you protect yourself from that inflation picture. It's very difficult. There's very few places to go. Property is obvious, but you know, if inflation isn't too high, it's not hyperinflation, it's 10-15%. You know, you look at property prices and go, oh, that's a bit steep. And also, it's a big nut. You buy a house, you're up into hundreds of thousands just for that house. Now you could use that you could level that up with a mortgage, and then use that as a leverage play on house prices. But it's a pretty spicy level of property. You've got equities; they're pretty spicy levels. So there's so much stuff that's expensive. Where's cheap? And that's what I find hard to find. And actually, when I look at it, I see gold stocks as cheap. I mean, some of these things are paying 5-6% dividends. Yeah, and on a gold price, it can only go up. So that's what I see. But the market is so glaring that it scares me. It's so glaringly obvious that I go, what am I missing? Yeah, I'm missing something. Is it a trap? And you always have to just be very, very careful because these are dangerous times. So my idea is you've got a big lump of cash, which is for short-term application in times of a crash. You've got precious metals, which are paying nice dividends and going to go up. And then you sprinkle maybe in some special opportunities that you think there are out there that you think might do something great. You know, some stock that you like and it's fallen out of bed and it's gone down. I mean, right now, for example, one that I'm not buying, but I would think of buying is Vodafone. Now, Vodafone's gone down and 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 down. It's a good company. It's worth more than it's valued at. It's going down and down and down and down. And if it keeps going down and down and down, I'll keep watching. I'll keep watching and watching and watching. And when it hits a certain level and it doesn't go down anymore and it starts going sideways, and everyone's going, oh, it's rubbish, it's gone, it's never, oh, rubbish, rubbish. It's not going down anymore. Then I would buy that. Yeah. And there's a few companies in the UK doing. So you look out for special opportunities, nothing too wild. In fact, the opposite, boring opportunities that are dull as ditch water, where something's got cheap and now it's gone to sleep. So anything sleeping, that's a good stock, worth watching. But apart from that, these are these.
I think something cheap that we mentioned quite some time ago was the gene editing companies that have gone down so much. So I know it might not be the best time to actually look at these, but they are cheap compared to where they were 8 months ago.
I got my face ripped off with those, I tell you. It's a very interesting education because those American biotechs, dear oh dear, that is spicy stuff. Yeah. And as far as I can see, as far as I can tell. I mean, one thing that's happened with the American indexes is they've crumbled from the bottom. Yeah, they're not down so much, but actually there's a lot in the middle and lower ranks that are absolutely wiped out. And you could say that these gene editing companies have been amongst those groups. But I also think, connected somewhat to these, there are people targeting ETFs that contain that sort of stock. And they're shorting the ETFs and they're shorting the stocks. And when the stocks go down, the ETFs go down, the money comes out of the ETFs, which means that the ETFs have to sell those stocks, push the stocks down. So they're trying to basically manipulate ETFs to the ground. And I do think that the gene editing companies have got hit by that.
Okay.
And so what I will be doing as I lick my wounds, well, and this will be a long-term thing, is I'm just going to be watching those guys, because at some point they will turn and they'll do what American stocks always do, which is, you know, bipolar behavior. One minute they're worthless, the next minute they're worth more than, you know, wisdom itself. And so I'll just be watching, I'll just be keeping tabs on them, and you know, maybe some of them are rubbish, maybe some of those companies will go away, but if any of them come up with anything, they will absolutely go off the handle. And now they're, if any of them have got any prospect, if any of them have got any hope of delivering anything on which CRISPR is allegedly meant to deliver, those things will go absolutely mental.
Yeah.
But right now, I've learned a lesson that these biotechs, it's not my space really, biotechs, but I just love the idea. I've been looking for something that I could buy and hold for 20 years. You know, in 20 years' time, I'm going to be 50. And I thought I'm looking for stocks that I could really do the old classic of buy and hold forever. And I thought, well, if this isn't it, I don't know what is. And was completely wrong. But, you know, investing is a learning experience, and you have to be 55% right, and you'll make a lot of money.
Clem, talking about, let's talk about crypto again. And we see the Binance is moving to kind of like world domination and starting to look also at traditional market for buying opportunities. I would like to see what you think about that, and where do you think they are going to be moving into or buying, or, yeah.
Well, I'm not normally a bear. I'm normally Mr. Long optimist, but I mean, okay, there's two ways of looking at crypto right now. You've either got a gigantic W, which is going to go way, way up, or it's going to keel over and go down to 10,000. There's no middle ground in my book on this. And I don't see that upside very strongly. I see that now all this stuff is out of the system, all the trouble in Ukraine and Russia, etc., is a no. That it's vulnerable. I mean, I was pretty surprised yesterday when it went through the roof, and I was pretty surprised this morning when it was down through the floor. I mean, it's just not a sandbox I want to play in at the moment. So I do not, you know, I don't understand it, and if I do understand it, I don't want to be in it. So I don't think it's. I think what you've seen in 2 days sums it up. It doesn't know whether to laugh or cry.
Yeah.
I think if it breaks down through the bottom of the current channel, it's going to fall under 20.
Yeah.
And if it broke up to do the W, and then it didn't. So, you know, I just cannot get excited about the direction of Bitcoin and crypto in general. Now, when it gets to the bottom, if it does collapse, then I will be very interested. And, you know, I will not jump in. I will just slowly sneak back in on it, because, you know, these are wild times. I think everybody realizes that. I mean, I think everybody I talk to is in shock. And I think you're seeing that in the market. I think you're seeing a market in shock, and it's shaking. And, you know, after a bit of time, when everybody's regained their balance, then it will be time to decide where the direction is. But the only thing that I feel strongly about direction is precious metals and other commodities as well. So miners are pretty strong, oil companies are pretty strong.
Exactly. You know, let's go back to oil. You didn't mention oil. We have talked about gold for almost all the show. But what about buying some gold? Is too late?
Oil, you mean, or gold?
Yeah. Oil, yeah.
Well, I'm
I remember you have Centrica.
well, that's gas, and they're banning all that, or they were banning. They're probably not going to ban it now. North Sea oil's in going to come back into vogue, etc. But then that's fragile, because if by a miracle we got good news out of Russia and Ukraine, whatever that good news might be, that would all subside. But I think that would be you have to be very optimistic to see that happen. Oil should always be part of a portfolio, without a doubt, and particularly if it pays a good dividend, which things like Shell and BP have a history of doing so. But I found what I don't like about it is oil is clearly a mainstay of the global economy. It doesn't matter how many people stand up and say, "Oh, I've got to get rid of carbons." Even if you stop using it any commodity that is only worth burning is a cheap commodity. Yeah. Oh, it's so valueless, I'm going to ignite it. It's a complicated soup of chemicals that we use for all sorts of clever things. Dyes and soaps and fertilizers and plastics and. Yeah, it's so damn cheap, we're going to burn it because we can, and we can get energy from that. Yeah. The value of oil is not just in its ability to let off heat when you burn it. So oil should be a very, very solid, doesn't move very much. Shell should be a very boring stock that kind of goes, but it doesn't. It goes bang, £24, bang, £10, bang, £16.
Yeah.
It's all over the place. It shouldn't be, and therefore I'm nervous of it, because it moves much too much for what it does and what it is and what is involved. You imagine building an oil rig. Imagine the strategic view of the world that you have to have. Well, their share price doesn't behave like that at all. It behaves like some drunk. It's all over the place. So there's a cognitive dissonance there between what that thing represents and what the price does, which means there's a lot of money to be made in it. But for me, just let it get stupidly cheap and buy it. And when it's not stupidly cheap anymore, sell it. And it's not stupidly cheap anymore. So, in fact, I bought some a few days ago when it went 5% for no apparent reason. So I thought, I can't not pick up that 5%. So I added. I should sell it now because it went back up 5%. I should just take my 5 and run. But yes, it all feels good. But the point is, nobody has a clear view of the future. And all you can say right now is that things are more volatile and more dangerous and less certain. So you have to look at everything in a way where you have to tell yourself, even if you know, the outcome is less certain, and therefore you can't afford to take on as much risk as you can in boring times. So you have to manage your risk. And now, for most people, it's not the time to risk. The other side of me says, now's the time to put on the big trades, because now's the time you're going to make the big money. But old pilots and bold pilots. There's no old bold pilots. Exactly. And I prefer to be an old pilot. After all, in 20 years, I'll be 50.
Yeah. Okay. Last things that I'm going to ask you there. I'm asking to just so many people. Right. What is going to happen? You think it's going to go nuclear?
No.
But so why iodine? People can't find iodine. It's the same thing.
Why wouldn't
face mask?
Why wouldn't you spend $3 on that?
But why? When in 2020, I remember I was going to France for this fashion show, and my mom would say, "You need to buy a face mask." And then I tried to buy a face mask. You couldn't find the face mask. And that was at the beginning of, all this kind of a pandemic in March 2020. Now it's the same thing. So you go online, you want to find iodine, and you don't find iodine online. You need to go in the shop. They said, "Oh, we have sold out. We don't have iodine anymore."
Yeah, look, in the stores a few weeks ago, there'd be enough iodine to supply all the people with thyroid problems and all the people who wanted to clear dodgy water, and all the preppers in the world, i.e. 12 people. And now 1% has woken up to the fact they're out of stock. The world is not configured to supply iodine to 8 billion scared people.
Yeah, to panic.
Yeah, and by all means, you know, if you're the sort of person that's always worrying and thinking what if, you would have a tub of iodine in your bottom drawer, in the same way as you'd have a few sovereigns in a sock. Yeah, but it doesn't mean you're ever going to sell. Well, how many people have a sovereign in a sock? Everybody in Britain, probably. Why? Because they think one day they might need it. Do they ever need it? No. They end up leaving it to their forebears. And you know, that's the way that people behave, isn't it? Some people prepare for the worst, and every now and again, now I'm unlucky enough to have to you know, cash that preparation in.
Why we are not going to get to nuclear?
Well, because apart from the fact everybody dies,
Yeah,
you can't protect the look. If you look at the history of war, the people in charge don't like to die. They don't mind everybody else dying, but they don't like to die. So when it comes to a battle like the First World War, well, why was it all the big capital ships didn't go out and slug it out all the way through the war? Well, because the admiral's in the front, on top of the tallest ship. He's the biggest target. Funny enough, they prefer to stay in and stay in port because it's much too valuable to lose that sort of stuff. Instead, they make up tin cans and put captains in it, and off they send their submarines to die. Yeah, it's the same with aeroplanes. Airplanes take 75% fatalities. If you're in the bomber crews of the Second World War, there's not many generals in those airplanes. Funnily enough, they don't mind sending the young to die, but they themselves, they're much too valuable to die. We wouldn't want to lose all those valuable people now. The troops, they're not so valuable. In fact, I actually met somebody a long time ago, and he was a soldier in the Second World War, and they wouldn't let him go fight because he was a tank engineer, and they were much too valuable to waste on dying. You know, you needed all your tank engineers, so he wasn't allowed to do anything, dare it. And you know, it's the same with war. So if you've got this weapon and it's going to kill you and your family, and you're the boss, you're not going to use that one now, are you? Because if they throw it back at you, you're personally going to die. And they don't like that idea.
yeah.
No. Young people, certainly. Send them over there.
Yeah. Okay.
So,
well,
you know, that's one of the reasons, is that you ain't going to, the person that presses the button ain't going to survive. And people and countries, having said that, generally in war, the people that start it do perish. The elites of those warring countries do perish. If you look at the elites in the last set of major wars, going back even, you know, back past Napoleon almost, well, even back into, you know, the War of the Roses, both sides of the War of the Roses perished entirely. That's why Henry VIII got in, because he was the only one left. His family were a bunch of people out in Wales that were so minor that they never perished. Everyone else had died. And that's why he got to be king, because the rest of them, the Yorkists and the Lancastrianists, they'd all killed each other over such a long period of time that the elite had destroyed itself. And, you know, you can see the elite destroyed itself in the First World War. By the time the 1930s came, they were, you know, they were all had to move out of their houses, move into flats because they'd gone bust. If beyond the fact that a lot of them obviously died as second lieutenants running at machine guns, but the elites were wiped out. Obviously, the elite in Germany was wiped out. The elite in Russia was extremely wiped out, and so on and so forth. And the elite of Great Britain was bankrupted and ended up having to sell all their big houses. So, you know, that is the history of war. But they don't mind going down that road as long as there isn't going to be something showing up to kill them early on.
Yeah.
And that is nuclear. That is mad. Mutually assured destruction. And hopefully we haven't forgotten that up here.
Okay, well, let's hope that nothing so drastic happen. In the meantime, precious metals is the most sensible place to look and look for your investment and trading opportunities as well.
So there's plenty of trading opportunities for those traders out there that have got the kit to do it.
Yeah, but still cautiousness and yeah, I think there is this element that to don't do things just because, just be more careful on risks.
Yeah, that's right. Take less risk, do a bit, you know, think hard,
exactly,
and you'll be okay.
Yeah. Okay, Clem, thank you so much for your insight this week, and I will see you next time.